All right, let's dive in. Today, we're unpacking one of the wildest, most unbelievable stories in modern finance, the story of First Citizens Bank shares. And it all boils down to this one single question. How does a company that Wall Street basically called boring for decades end up producing one of the most incredible stock performances in history? I mean, it goes against everything we're taught about what makes a great investment. I mean, just look at this. Seriously, we are not talking about just squeaking by the S&P 500. This is a multi-decade masterclass that just left the market completely in the dust. This wasn't some short-term fluke. This was a long-term strategy paying off in a huge way. And then you see this, a stock price that's over $1,600 a share. Why? It's simple, really. They almost never split their stock. It's like a secret handshake. They're not looking for short-term traders. They want long-term partners. That huge price tag? It's a statement. Okay, so let's peel back the layers on this impossible stock story and get to know the quiet company at the heart of it all. So this is First Citizens Bank shares, ticker FCNCA, founded way back in 1898 out of Raleigh, North Carolina. And on the surface, it is the definition of a plain vanilla regional bank. No flashy headquarters, no Super Bowl ads, they just do banking. So if the what is so ordinary, how on earth did they pull off the extraordinary? Well, to understand the how, you have to look at the who. And that leads us to the one family that's been running the show and their secret recipe. So the Holding family, they've controlled this bank for generations. And because they have so much voting power, they can do something that's almost impossible today. They can just hang up the phone on Wall Street. They're not thinking about this quarter's earnings call. They're thinking about where the bank will be in 20, 30 years. And their number one rule, above everything else, just survive. And this whole philosophy is built around one really powerful idea called optionality. Now, it's not about being a fortune teller. It's about being so rock solid, so disciplined with your cash, that when a huge once-in-a-lifetime opportunity pops up, which is usually when everyone else is running for the hills, you're the only one standing there with a checkbook ready to go. So let's see how this whole idea of optionality gets turned into a business strategy that is, frankly, brilliant and the complete opposite of what everyone else does. Okay, check this out, because this is the whole game right here. When times are good, when the economy's booming, what do most banks do? They go crazy, right? Aggressive lending, chasing growth. Not for Citizens. They play defense. They lend carefully, they stack up cash, like a squirrel preparing for winter. And why? So that when the crash inevitably comes and all those other banks are scrambling to survive, First Citizens, well, they go shop. This really says it all. They didn't just weather storms, they harnessed them. What looks like a total disaster to everyone else was to them the best buying opportunity they'd see for a decade. And there is no better, more perfect example of this strategy than the financial drama that went down in March of 2023. I like to call it the Silicon Valley heist. You remember this, right? The collapse of Silicon Valley Bank. It was pure chaos. The news was on 24/7. People were panicking, other banks were teetering, and who calmly walks into the middle of this five-alarm fire, completely prepared? You guessed it, First Citizens. All those boring years of saving up, this was the moment they were waiting for. And the deal they got, wow, it was unbelievable. They picked up huge chunks of SVB's business. We're talking loans, deposits, the whole shebang, at a staggering $16.5 billion discount. That's a deal you only get to make because you have the cash and the guts when no one else does. And Wall Street, which had basically ignored them forever, finally had its jaw-drop moment. The stock went parabolic, jumping over 50%. In a flash, investors realized the genius of what had just happened. This one move totally transformed the company, like overnight. So the win here was massive. They didn't just buy cheap assets. They instantly got a roster of top-tier tech and VC clients. Their earnings power exploded, and they basically cemented their reputation as the absolute masters of crisis investing. So, okay, this is more than just a crazy stock chart. What can we actually take away from this quiet giant of banking? Well, their playbook is so simple, it's genius. First, boring is beautiful. The most unsexy businesses can give you incredible results. 2, crises are your friend. The absolute best deals happen when everyone else is terrified. 3, how you use your money is everything. Being smart with capital beats just growing for growth's sake. 4, time is your superpower. Let compounding do the hard work for you. And 5, forget what's popular. The real gems are usually the ones no one's talking about. Which brings us right back to where we started. If this was all so brilliant, why on earth did Wall Street completely sleep on this story for so many years? And the answer is just perfect. They ignored it because it was boring. That's it. There were no flashy PowerPoints, no promises to change the world, just quiet, disciplined work, day in, day out. The very things that made it a legendary investment made it a terrible soundbite for the news cycle. And maybe that's the real takeaway here. In a market that is just obsessed with what's new, what's fast, what's disruptive, First Citizens is this incredible proof that slow, steady, and smart can still build a legend, a true masterclass in quiet compounding. Thanks for tuning in.